Welcome friends to Old Man Wisdom. This is where we talk about trading Forex and managing your money. Of course, the two go hand in hand, and today we are talking about how to protect your Forex trading account by using specific exit strategies when it comes to trading Forex. So I'm going to highlight three main exit strategies, and we're going to discuss the pros and cons about each one. So let's get into it. So the first exit strategy. So once you're in a trade, it's very easy to pull the trigger and enter a trade. But what a lot of Forex traders struggle with is how to exit or when to exit their trade. So the first of three strategies that I'm going to talk about today. The first one, of course, is my favorite. It's one that I use throughout my videos, which is using a simple win to loss ratio strategy. What that means is that if your risk is going to be 30 pips, your profit is going to be at least double that, so a 2-to-1 ratio, which is what I work to personally. If you're risking 30 pips, you're hoping to make 60 pips. So you've got a fixed exit. It's already there. It's 30 pips, as an example, would be your exit. The only little twist that I personally put on this, you go into profit, and once you hit a profit of 30 pips, I move my stop loss to break even. That's the only little twist that I use on this exit strategy. So it is a fixed 30 pips, for example. That's what I'm going to risk. But once I'm in profit by 30 pips, I move my stop loss to break even. And of course, I'm going to not make anything, or maybe make a small profit, or at least cover my swap fees or my commission fees, whatever it is that your broker charges. So, you know, your risk could be 30, 40, 50 pips, whatever the risk is. The only little twist I use on this exit strategy is that once or if the trade goes into profit by whatever you're risking, I just move my stop loss to break even. Otherwise, it's a very simple exit strategy that I personally use, and of course is what you will see throughout my videos as to how I use that. So the second exit strategy that you Forex traders might like to use is using exit indicators. And there's very easy ways to do this, to implement this. I'm only going to suggest one. Again, I like to keep my trading nice and simple. You can use all manners of different indicators as an exit strategy, but the one that I've used in the past is simply using a moving average. So once you're in the trade, I use the moving average. So once you're in the trade, I effectively use, or used to use, a moving average as my stop loss, as my exit. So let's say you're in a buy trade and the price is moving up nicely. Should the trade break or close below the moving average, that is when you would exit the trade. Now sometimes this is going to work in your favor, and of course in other times you're going to wish that you had stayed in the trade, but it will protect your profits and it will minimize your risk. So that's how I use a moving average as an example of an exit strategy once you're in the trade and of course you're in profit. You can use the moving average as an exit strategy for your trading. The third and final example of an exit strategy is by using a trailing stop. So a trailing stop can be set very easily once you're in the trade. Of course, when you use a trailing stop, you need to have it set to your preferences. Again, as an example, once you're 20 or 30 pips in profit, your trailing stop can be triggered, and your trailing stop can literally start at break even. So as the trade moves more and more into profit, so does your trailing stop move higher and higher into profit. With a trailing stop, it means that your stop loss can be moved up automatically, which means that you make slightly more profit than you would if you set just simply to break even, like I do personally. So trading stops can be really good. Of course, you can set it on your computer very easily, whether you're in a buy trade or a sell trade. So we're all different. We all trade in different ways and have different styles. And in many ways, there's not a right or a wrong when it comes to these three exit strategies. It could simply come down to your preference, the way you prefer to trade. Now, I've only mentioned three, which is a fixed win-loss ratio trading exit strategy. You can use exit indicators, or of course you can use a trailing stop strategy to exit your trade. But whichever one you use, have a clear idea of how it's going to work before you enter a trade. The last thing you want to do is enter a trade, you're all excited, but you have no idea how or when you're going to exit the trade. So have a clear idea of what you want to use and how you want to use it in your trading style. So I hope this video has helped. If it has, give it a thumbs up. And of course, don't forget to subscribe to my channel, and then you can get notified with all the new videos that come out in the future. So thanks for listening. I hope you've enjoyed the video, and until next time, take care.